Starting 2014, there has been this string of small critical reforms that have had their share of limelight during the day, the backlash during the political winters, the period where they were almost stagnant before emerging into completely something else and becoming very critical to the grand plans of digitization of this government. You started with Aadhaar, which some would say was a UPA idea, but the way it was implemented, it's often not about what something is, but what its application is, how it's implemented. So you start with Aadhaar and go back to 2014-15, the Supreme Court coming out with its own judicial activism / wisdom on Aadhaar. Then you had Jan Dhan accounts, opposition parties saying, "Oh, this is a ridiculous idea. People won't keep a single penny." And today the amount in Jan Dhan accounts runs into lakhs and crores of rupees. Then you came with the Ayushman Bharat idea. Then you came with Mudra loans. Today we are talking about the e-rupee vouchers under the National Digital Health Mission, which is due to be announced later next week on 27th September. So you look at the journey from 2014 to 2021, you put in demonetization inside it. You also put in GST. Now you put in the pandemic, which has made the cashless idea even more prominent. And you see there's this string of small elements being coming here and there, a complete network coming together like the Spider-Man's web of digitization. And this digitization has been critical. Now, if someone wants a testament to the success of this digitization, 42 crore Jan Dhan bank accounts, 500 million people insured under Ayushman Bharat. We don't even know what the National Digital Health Mission would be capable of doing with e-rupee vouchers. We're talking about the CoWIN app right now, the number of people who've been vaccinated, digital certificates, while people in the United Kingdom are struggling with paper cards, resembling those Visa and MasterCards, but on very poor quality paper. You must have seen those images on Twitter. We get our vaccination cards right on our phones due to digitization. This is tremendous success. Look at the data monitoring that is being done with Aadhaar. I wrote a piece a few days ago on the vaccination in rural UP and how Aadhaar was critical when it was about just estimating the number of people who were eligible to be vaccinated. Just some of the few things. Look at the DBTs during the pandemic. Look at the food transfer that was easy, the cash transfers, tons and tons of things. And another testament, 3.5 billion transactions and 250 financial institutions present on UPI as of July 2021. These are tremendous figures. And mind you, don't take too much happiness in 3.5 billion, because even at 3.5 billion, that just amounts to, say, 3 transactions per month for every Indian citizen on an average. Not the right metric to say because there are children, rural people, but still just 3 transactions. That's quite less. Someday we'll be seeing it at 30 billion. It won't be a surprise because given the potential of India's economy, given the internet penetration, given the mobile phone penetration, we'll be seeing 30 billion. 3.5 billion is a very small teaser. But if I have to talk about the next big reform, what after UPI, what after Jan Dhan, what after Ayushman Bharat, that one loophole, that one something that left to be desired was, what do we do about credit expansion? What do we do about people who want small ticket loans? What do we do about people who are not looking for 1, 2, 3, 4 CR loans? They're not looking for lakhs and lakhs of loans. They're not looking for automobile loans even, or real estate loans. These are small ticket loans. People just want to do day-to-day business. They want 3,000 a day, perhaps 20,000 a month, maybe 50,000 over a period of 1 year. What do we do about these loans? Because the bank has no incentive to serve them. The banks want to make a profit on every loan, rightfully so. So why to go through so much of paperwork for a loan that's merely 20,000 rupees? At the end of it, they might, in the best case scenario, make an interest of, say, what, 1,000 rupees, 1,500 rupees? And this is where the reform we are going to talk about today, this one reform which largely went unnoticed within the media spectrum, this is what we are going to talk about today. Now, the loan problem today, I have to start with the loan problem first of all. I am an urban citizen, you are one, most of you would be one. If you're not, we'll come to your part later. But as an urban citizen, as someone who lives in, say, India's metros, India's second tier cities, or maybe third tier cities, not the villages, just the cities here, What's the procedure of getting a loan like? You go to the bank, you say, okay, I need a 5 lakh loan, I need a personal loan, I need an automobile loan, I need perhaps a loan to buy a house or something else. And the bank then puts forward a demand, says, okay, get your Aadhaar card, get your PAN card, get your salary slips. We need your 6 months bank statement. These are the bare minimum things. Then follows a self-attestation process. You get this Xerox, that Xerox. You need to put a file together, then go and have a to and fro with the bank, because it's almost a miracle to satisfy the banks just in one go with the paperwork. And that's for an urban citizen, someone who has access to the internet, someone who has access to a stable income, because that's very, very important when it comes to taking a loan, a stable income. And this way, in this process, you can only engage with one bank at a time. When was the last time you went to 5 different banks together simultaneously for one single loan you were looking for? You won't remember that, because most of you, at least not in the business loans, you've never done that. Even for an automobile loan, you'll just try to gather the rate of interest. Okay, this bank is serving me this bank is serving me this. And even today, most of the automobile outlets have their own tie-up with banks. The situation worsens if you're from the rural areas. 800 million people in villages of India, they do not have a credit history. Yes, they have Jan Dhan accounts, they have the RuPay debit cards, wonderful, wonderful stuff, but they do not have a credit history. For the banks in the cities or NBFCs even, there is no way of understanding that is this person capable enough of paying back a loan which he or she takes from the bank. That loan might be 20,000 rupees, it doesn't matter, but is there a capacity? There's no way to evaluate that. And once there is no way to evaluate that, that apprehension sinks in. Why should we give them a loan? Now, this is the loop everyone is caught in. You want a loan to do business, but you don't have a credit history. But if you don't get a credit history, if you don't get a loan rather, how will you develop a credit history? So this is endless loop a lot of Indians were caught up in. Now, in 2016, the Reserve Bank of India came up with these ideas of the account aggregators, the framework altogether. And I'll put a link in the description also for the framework, for an explainer of the framework as to how it will work, what is its importance, things like that. But the idea was, let's have some RBI licensed bodies called account aggregators that can facilitate the data transfer from financial institutions, say your banks, your income tax portal, which would give your IT returns, your GST portal, which will give your GST returns, your other banks, which may give your bank statements, how much you spend, where you spend, things like that, to a financial lender who might you approach for a loan. Say if I go to Bank A for a loan, Bank A, using the account aggregators, which are RBI licensed bodies, will access information from Bank C, income tax portal C, GST portal D, and another few financial institutions, say an NBFC I've engaged with, a private lender I've engaged with, things like that, and create a summary of data which you will then transfer to Bank A, to whom I originally went for loan. So what happens in the process? I'm not going through the tedious paperwork. I'm not going through the tedious to and fro with the bank. I have given my consent to the account aggregator, and I'll come to the consent part in a minute. I have given my consent to the account aggregator that yes, if Bank A is requesting my data for this request I've made to them, yes, share the data by all means. Bank B has my consent, takes the data from all the financial institutions, facilitates the transfer, gives it to them. End of the story. For people who are from rural areas, still it's an unexplored idea. We're still in its very young stages, but the ideal situation would be to track their spending history, to see how much of the bank accounts they use, how active are their accounts, what is the to and fro of the cash balance, and things like that, just to give an idea as to what the capacity of the borrower is. Now this is an account aggregator, how it will function. Now the obvious question, as many like to ask, have been asking since the last 7 years, data privacy. It's a good question, it's an important question, nothing wrong about the question. But the problem is the kind of fear that is created around data privacy. Everyone believes that anything that is digital and initiated by the government will be an invasion of privacy. That's very primitive thinking, to be fair. You cannot just assume that anything that is a digital pursuit by the government would be an invasion on individuals' privacy. Nevertheless, in this case, one would expect that the account aggregator will now have all my data. No, Absolutely not. The first aspect here is the data would be encrypted and would only be visible to Bank A. They facilitate the transfer. They do not store the data. It's very important to understand that these account aggregators, they won't store the data. They would be facilitating the transfer of the data. Think of it as a very basic example. People who deliver your Amazon packages to you, they facilitate the transfer of the data, but they have no way of looking inside the box, what's really inside the box. They might see it on the bill that, okay, this might be a fragile device, a mobile device, but they do not know what's really inside. Just to give you an example, a very basic one. Now, the second question was, hey, but what about the consent? My consent, my consent. Even though the people who create the most noise around privacy do not realize the amount of data Google, Uber, Facebook, Instagram, the kind of data these companies, private companies, take away from the user without their consent, but nevertheless, they like to target the government. But the government or the account aggregators in this case also have that corner covered. The consent would be very similar to how we deal with UPI right now. What happens? Someone requests you money, you get a notification, you go into your Bheem app or any of those apps you use, you enter a 6-digit PIN, and that only facilitates the transfer of cash. Correct? That's how it's going to work here also. Bank A would request information, account aggregator will send you a request, a 6-digit code which you'll set, tuck, 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 data gets transferred, facilitated by the account aggregator. It's very important to know, facilitated. Now, this is something that's very young. Perhaps for the next 1.5 year, it won't get enough attention. Same was the story with UPI in 2016. It did not even touch 0.1 million transactions in its initial months, and just around 50 odd financial institutions were partnering with it. But once it gets there, 4-5 years from now, 2026, 27, look at the fintech economy that can be built on the mountains and mountains of the terabytes and terabytes of data generated from such transactions, generated by encompassing the rural India into the credit expansion ideas, things like that. This has infinite potential. And I had the opportunity of speaking to some experts on this, and they're very optimistic that MSMEs would now find an incentive to go for formal financing as well. Because if you look at the formal financing for MSMEs, for every 1 rupee they finance from, say, formal institutions, your banks or formal lenders, NBFCs, things like that, 7 rupees. For every 1 rupee, 7 rupees is taken from non-formal sectors. This could be the market, open market, informal lenders who give money at a very high rate of interest. So the MSMEs will also have an incentive now to say, okay, let's engage with the banks. There's less of paperwork, ease of getting loans. Let's engage with the banks. And that would be very important, because unless you do not formalize these MSMEs, and these are not your big factories with, say, 500 employees, 1,000 workers, not like something which as little as 10 people running a small jalebi shop in the corner of your road, in the corner of the street outside your house, things like that. Now, and we at Swarajya, from a very, very long while, we've been big fans. We've been always cheerleading the digitization, the whole pursuit of digitization by this government. You look at what our editorial director R. Jagannathan wrote a few days back about demonetization and how it sort of enabled, as a silver lining, how it enabled people to go cashless. I have attached 2 links in the description back from 2018 where I talk about, 1, the Jam Trinity, and 2, about the 6 trillion pursuit. Morgan Stanley had put out a report back then about India being a 6 trillion economy by 2028. Of course, the pandemic has its own impact, but sooner or later we are going to get there to being a 6 trillion economy. It's not a matter of if, it's a matter of when. So I've put out those links, and I've actually highlighted in those stories back from 3 years ago as to how digitization would be important. And what we are seeing today in these account aggregators is a big, big leap towards that. Perhaps the biggest leap we have seen since UPI, and the biggest leap banks would have seen in credit expansion in the history of independent India. Perhaps I would take that risk and say that this is the biggest reform for credit expansion in the history of independent India. Give it 3-4 years, because account aggregators, they are going to usher credit for millions of borrowers in India like banks could never do with the conventional paperwork. Thank you for watching.